Rupee ends flat after opening week against the US dollar. The weakness comes amid volatile sentiment due to uncertainties over trade tariff. IndusInd Bank share price erases losses to inch higher. The stock has been under pressure following a series of news impacting the investor confidence. Financial year 2024 annual report of IndusInd Bank on NSE suggests that the chief executive officer sold 80% of holding near the peak. Sumant Katpalia held up to 35,000 shares at the start of financial year 2024. About 1.98 lakh shares were vested as ESOPs. Further, 1,85,991 shares were sold at an average price of 1,524 rupees per share. Katpalia currently holds up to 48,000 shares. Executive Director Arun Khurana also sold 2.14 lakh shares at 1,499 rupees per share and currently holds up to 40,000 shares. The Department of Financial Services steps in to take stock of the issues dominating the news around IndusInd Bank. Sources tell NDTV Profit that Financial Services Department recognizes issues including accounting discrepancies, governance challenges and leadership concerns at the lender. The Department of Financial Services is in talks with RBI ensuring thorough examination. With this, the government wants to maintain stability and integrity within the financial sector. Meanwhile, the IndusInd fiasco serves as a wake-up call for the Reserve Bank. As per sources, the RBI supervisory departments are talking to banks on foreign currency positions. The supervisors seek specific compliance reports on current positions. Central bank supervisors also seek clarity on bank mark-to-market positions on foreign currency borrowings. After an intense tussle over how airwaves should be assigned for satellite internet, Reliance Jio finally signs deal to bring SpaceX Starlink internet to India. The announcement follows Bharti Airtel announcing a deal yesterday. A part of the partnership, Jio and SpaceX will offer broadband services across India, including the most rural and remote regions. This includes plans to offer Starlink equipment via its retail stores. The Starlink solutions will also be available through its online storefronts. Airtel Sunil Mittal welcomes the collaboration between telecom and satellite companies, calling it a major step towards global connectivity. Hailing the partnership, Mittal referred to his speech at the recently concluded Mobile World Congress 2025 in Barcelona. At the event, he urged telecom and satellite companies to work together to ensure universal coverage. The recent market correction might have made investors jittery. Motilal Oswal says the sharp correction offers opportunities. Also says that certain factors that Indian equities may be in the latter stages of correction. Minimal foreign outflow impact is getting smaller. The brokerage firm expects double-digit earnings growth in FY26. Morgan Stanley highlights some headwinds for the IT sector. In the rapidly evolving space of information and technology, the shifting macro environment contribute to the flurry. Morgan Stanley sees downside risk coming for both the revenue growth of India, IT services and valuation. According to the brokerage, some stocks multiples could become more polarized. With a lower GDP growth in the US, IT sector is in the front line of impact. Gulam Zia of Knight Frank India weighs in on the recent realty downturn. The realty expert says that the premium segment of housing is picking up. He highlights the problems in mid and lower end segments. Zia says that the money from the market bull run has gone to investments in premium segment. He believes that the loss in equity markets will affect developers and also expects the housing prices to remain stable in the future. Now, viewers, it's time for a quick break on Market Express. Stay tuned to NDTV Profit. We will be back with all the action.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private
Hello viewers, today we are joined by Mr. Sharan Hegde, the founder and CEO of One Person Club, in an exclusive conversation. So welcome to NDTV Profit, Sharan.
Thank you so much for having me.
So as you know that markets currently are bleeding, we are going through a bear run and we are also surrounded by a plethora of retail investors who are going through this for the first time. Now they are young investors and they are from a generation who have never seen a market correction that has continued for this long. So what would be your advice to them?
All right. Firstly, I would like to say that we are not yet in a bear run, right? I think we're far from reaching that point. Just to give you some context, in the 80s, the US market went through almost 7 to 8 years of bear run, where the markets didn't really move at all for like almost a decade, right? For us, it's just been a couple of months. So I think, firstly, we need to calm down, right? It's not like the end of the world, like what people are saying. And secondly, you're right. Most of the people in India, or at least on social media, most of them have invested just in the last 1 or 2 years. I personally have been investing for the last 10 years. So when people are saying markets are bleeding, their portfolio is red, but for somebody who has been investing for almost a decade, their portfolios are still green, right? So the moral of the story is if you've been a long-term investor, then this sort of a market correction is not really looking bad on your portfolio. But if you're somebody who's just been investing 1 or 2 years, then yes, you're seeing your portfolio in the red. And this is exactly where investor behavior comes into the picture. Some of the greatest investors in the world said that, investing is much more about your psychology than about the numbers. So at this important juncture, what people do with their money is really, really important because you're not just using logic to make a decision. There's a lot of emotional triggers which is, affecting your decision-making process. And what I personally follow is a proper diversification across asset classes. Although equity is my favorite asset class, almost 50% of my money is in the Indian markets and another 15-20% is in the US market. I'm well diversified across gold, crypto, real estate, bonds, private investments. So I have a portfolio which is well diversified. So even if half of my portfolio is not doing that well this year, I know that my other asset classes are really performing well. So only when you have that diversified approach, you have that peace of mind. But if you are sort of somebody who is after that quick money-making strategy where you're like, okay, I saw that the Indian market is performing well, so I'll put all my money in the Indian markets, then you might be in trouble right now.
Now, coming on to something more specific, 1% Club. You recently received a SEBI registration as well, and that was a big day for you.
Yeah.
So now this happened during a time when the regulator was curbing a lot of illicit advice that is, circulating on social media handles.
Right.
So how do you feel that your operations have changed in tune with such, curbs or such an environment after getting the registration?
I would say the license was just a matter of formality. We've not really changed anything at all from day one. For us, getting the license was more from a business objective that until that point of time, we were not able to really give financial advice on a one-on-one consultation basis, which is what people really want. There's only so much of education that you can do on social media. But when it comes to implementing the strategies, that's where people go wrong. Like we're talking about the current market situation. A lot of people had invested in the market over the last 6 months, 12 months. But right now, when the market is not doing well, people really need that hand-holding support, which they don't have access to. Like when you fall sick, you can go to a doctor at a hospital. But when you don't know what's happening with your portfolio, who do you go to? You're nobody, right? So we sort of wanted to build a company which sort of creates financial doctors for the country. So that is why we took the license so that we can provide that kind of a service. But nothing has really changed in the way we operate our business or the way we communicate to our audience. It was just a matter of formality, and SEBI was kind enough to give it to us. They trust in what we are doing, and I think the numbers are speaking for itself. We already are managing more than 750 crores of assets under advisory. Almost 600 HNIs, are a part of our clientele, and we are getting more demand than what we can handle. So very, very grateful that God has been kind to us, and also the regulators have been kind to us.
You talked about providing some sort of a financial help to the people of India. Now, Indian population that is investing needs some sort of handholding and guidance, that's true. But at the same time, when they look for it over the internet, they do not find a lot of really formalized and, right channels to get this information from. So how would you suggest them to, kind of identify that these channels are wrong and these channels are correct? What kind of due diligence they can do on their own part?
I think there is no right or wrong answer over here, because there are a lot of unregistered investment experts who are doing a good job as well. And at the same time, there are a lot of registered investment experts who are doing a very bad job, right? So there is no right or wrong answer that, okay, if this person has a SEBI license, you need to listen to them. Or if this person doesn't have a SEBI license, you should not listen to them. So I think it's more about you understanding how important it is for you and finding a person who is actively going to manage your money for you rather than just listening to them on social media.
But are there any markers here that an investor can look into that, okay, this person is giving me genuine advice?
Again, see, the initial thought would be looking at their qualification. How many gray hairs are there on their head, right? But all of this, I think, is just a facade. I think at the end of the day, you have to take a leap of faith. It's more like, having that mutual trust and respect with that person. It's sort of like getting into a relationship, right? You don't know whether, the person that you're in a relationship can be a potential, spouse one day. You have absolutely no idea. No matter what you evaluate about them from the outside, their job, their work experience, you're never going to be absolutely damn sure whether this person is right for you. Similarly, with a financial planner, only unless you actually dive into it, work with them for a period of 1 year, do you actually know whether they're the right person for you. Because the job of a financial planner is less about managing the money and more about managing your emotions. So it is sort of like a relationship if you think about it.
So you were talking about 1% Club also just now, and you were saying that God has been kind. So what are your, sort of 2 to 3 year expansion plans? What are you thinking? What are your strategies?
Sure. So we started off as a financial education platform. about 3 years back. And currently we have almost 80,000 members who are paying members in the 1% Club, and almost 500,000 people who have attended any one of our master classes. The second strategy, the second phase of our company was to get into financial services, where we didn't just want to educate people, but we actually wanted to give advice, where we actually want to walk the talk, right? Don't just say it, do it for me. That's what the customers ask for. And that's what we're currently doing. Today, we have a wealth management team of almost 50 people, and we are constantly like hiring 5 people, 10 people every month because the demand is so much. But we realize that to really create a large scale impact, we really need to get into the fintech space. So we will be launching our fintech products very soon. We will be launching our own investment products, fixed deposits, mutual fund baskets, stock recommendations, credit cards, insurance advisory. So we'll be getting into all of this. So the goal is that in the next 10 years, we become the largest fintech company in India. Today, obviously, we're a very far place away from that. But the way that the team is operating and the kind of opportunities and unfair advantages that 1% Club has because of our social media distribution and the trust that we have in the market, I think we have an unfair advantage and we'll be one of the biggest fintech companies in India.
Coming on to another topic that you have very openly spoken about several times, AI and automation. So to what extent 1% Club is using AI in its function?
We use AI almost on a daily basis, and we began by using AI on content creation, and I think that the whole world has already seen it, what AI can do in the world of content creation. Some of my videos are not even there, it's like an AI model, right? But beyond that, now we are exploring AI in financial planning as well. We are looking at how we can improve the sales team processes with AI, how we can do better research with AI. So it's a lot of applications, and I think now AI agents are also coming. So the work of entire human beings now can be replaced by AI, right? So I'm not even kidding, right? The only thing that I feel that AI cannot replace is the human element of actually talking to somebody when it comes to money management, right? And maybe also the sales team, because you always need someone to talk to, someone to convince them to pay you something. But beyond that, and even the tech team, right? Like a lot of our code is now written by AI. What we've been able to build in our app would have actually taken us a year, but our team was able to do it in 6 months with half the team size, just because of AI. So I think with the more and more advancements coming in, our team size will remain the same, but the work that we will do will become more and more with that same team size. So it's both exciting and dangerous at the same time.
So currently, we know that you have been investing for the last 10 years and you've been teaching financial discipline, financial advice, and a lot of things to your audience for a very long time. So how do you see that the picture of investor education in India has changed, and how is it slated to change in the coming years?
I think it's just a factor of where people are consuming their information from. It won't really change that much in the coming years. What we saw during COVID was the migration of people consuming their information from newspapers and TV to social media, right? So unless there is a new media platform which comes and teaches people about investing, I don't think there will be any big change going forward. I think it will remain pretty much the same. I think YouTube and Instagram will keep growing as platforms for learning about investing and finance because people still like to, consume things very quickly instead of reading a book.
And then the final question of all, being at 1% Club, doing something which is not heard of every day, from starting investor education, teaching people, to starting a platform which is going to venture into financial products also.
Correct.
So how is a normal ordinary day spent by you in your company?
Yeah, I mean, I think all put together, I run like 4 businesses, right? Or I look at content creation as a media business. And then 1% Club is an education company. And then we have financial services, which is a SEBI-registered company. And then we have financial products, which is becoming out very soon. But the mission is the same for everything, which is educating people as to where to put their hard-earned money. So although it seems like it's a lot of things, but the mission and the vision is the same. So it doesn't really feel like, I have to do this, I have to do that, I have to do this. It's mostly about having a crystal clear clarity on where you want to go, finding the right kind of people who believe in that mission, and constantly working with the team at getting better at what we are doing. We don't like to be like, okay, are we the best at what we do? We are like, how can we be better than what we did last year? Right? So it's always constantly pushing the boundaries.
Thank you so much for speaking to us and giving us your.
Thank you so much.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The Nifty Sensex end lower, extending the loss for the third day as uncertainties around tariffs and US recession fears dominate the markets. Sector-wise, Nifty IT takes a big knock, enters the bear market territory, cracking over 3%. In February, a notable shift in investor behavior as reflected in the latest AMFI data that shows net equity inflows decreasing by 26%, while inflows into small cap funds dropped by 35% and mid cap funds saw a 34% decline. All eyes on the retail inflation data expected shortly. Economists expect the headline inflation to fall to 4% from 4.3% in January. And IndusInd Bank's shares rebound sharply after the CEO says They are confident of profit in Q4. Meanwhile, NDTV Profit finds CEO Sumant Katpalia and Deputy CEO both sold 80% of their shareholding in the bank during its peak. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as national and international news. On to our top focus of the day. How did the markets fare? The benchmark indices, the Nifty and the Sensex, both continued to shed weight through the course of the day, marking the third consecutive day of losses. Most sectoral indices actually rose, with Nifty Finance leading the gains, but we saw Nifty IT and Nifty Realty emerging as the top losers. In fact, IT fell to an 8-month low as global brokerage firm Morgan Stanley projected weak revenue growth for the space. On the other hand, we also saw IndusInd Bank, a story that NDTV Profit has been breaking on constantly, that has been in focus on grounds of accounting discrepancies, that actually bounced back to gain over 5% after it crashed around 26% yesterday. Very interesting events actually taking place. And to give us more context and key highlights of the markets overall, my colleague Puneet now joining us live. Puneet, over to you.
Well, thanks for that. And as you rightly said, it was a day where the Nifty as well as the Sensex ended with flattish to a negative bias on the benchmark indices. Nifty and the Sensex has ended lower for the fourth consecutive day. And, we've seen pressure across stocks today. Of course, IndusInd Bank wasn't focused after yesterday's fall. We did see the stock tank by about 5% at the start of the trading session, but we saw swift recovery in IndusInd Bank post that, gaining roughly about 3 to 4% across throughout the day as well. We saw, of course, the biggest story today was the Nifty IT. We saw Infosys, Wipro as well as Tech Mahindra being one of the top losers in trade today. And as you rightly said, the Morgan Stanley note, especially downgrading Infosys while cutting target prices across the other IT majors, was having a bearing on all these stocks. Apart from that, when you look at the Nifty Midcap 150, it ended roughly about 0.5% lower for the day. This was led by stocks in the telecom space such as Bharti Hexacom as well as Indus Towers, and it could be some impact of Starlink's entry into India having a bearing on both these telecom majors as well. Apart from that, the small cap 250 also didn't recover much, down 0.3% for the day. And this was led by some big movers on the downside. Indegene down by about 9%. First Source Solutions also down by 7%, which was these two were the top losers of the small cap 250. Small cap 250 has ended lower for the third day in a row. So it's something to watch out for going forward, how the broader market performs as well. When you look at the Nifty IT, ended 2.8%